This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Need help in finding investors for your startup, fund, or angel group? 10 Capital provides funding as a service helping you find accredited investors. Contact 10 Capital to gain access to investors for angel and venture capital funds, family office rounds, and syndication raises. To learn more, go to 10capital.group. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Darren King, General Partner at Unbridled Ventures. Unbridled Ventures Fund consists of accomplished angel investors who provide funding and expertise to help entrepreneurs fulfill their American dream. Darren, thank you for joining us.
Hall, thanks for having me today.
Great. So tell us more about your background. What did you do before starting to invest in early stage companies?
Well, in the beginning, I started out as a CPA back in the mid-90s, and I never thought that being and in particular an auditor at a CPA firm, and I never really thought that was going to help me become a venture capitalist, but it was has been very helpful because in auditing, you're taught to verify information that you receive. And a lot of times I've noticed that angel investors don't verify information that they've received, and sometimes they get in trouble. So that was very helpful to me in my career, but I realized I didn't want to be a CPA. The hours were too long and I really wasn't that good at it. So I left that and became a CFO for a startup back in the mid-90s that was a staffing company. And I don't know if you remember back at the time, in the mid-90s, the staffing business was a very sexy business because everyone thought we were all going to outsource all of our employees. And that didn't quite happen, but we grew that quite a bit. And then in late 99, I got into a company that we later renamed hosting.com, which was a cloud infrastructure business. So I kind of felt like I was in the internet space early on. I tell people the modern internet started in 1996 when Netscape created their browser. So I jumped into the space in 99, did that for a decade. And then we sold that business in 2009 to Wachovia Capital. Since then, I've been doing angel investing personally, and I've been a part of the two angel funds. The first one was a fund called the Enterprise Angels Fund, which is here in Louisville, which is a voluntary fund. And then Unbridled Ventures is my first fund in which I'm the lead GP.
Great. So what excites you right now?
I think there's a lot of opportunities in healthcare. There's the healthcare costs are spiraling out of control, but you also have this convergence of between AI and just big data, just a lot of opportunities to take data and make decisions based on it. In the past, we used EMR systems and large databases just to collect data. And I think what we're going to see in the future is more diagnosing of patients and decision making being done by software as opposed by specialists, which hopefully will drive down the cost of healthcare. The other area in healthcare I think is really exciting, but it's really hard for angels to play in, is just all the gene editing and the therapeutics coming along in that area. I invested in a company about 6 years ago called Poseida Therapeutics that did CAR T, which is basically taking the cells of your body and reprogramming them and putting them back in. You're hearing a lot of people talk about that today. And I think we're still in the very early innings of solving all kinds of disease with editing one's DNA. But that's an area that costs a lot of money to get into. So in healthcare, diagnostics is, I think, a little bit easier for angels to get into. The other area that we actually just recently made an investment in that we like is ed tech. partly because it's just a large space, partly because COVID and what that's done in the classroom is introduce more software, and I think we'll see more personalized learning be introduced to um, in the classroom. And one of the companies we invest in is called Levered Learning, and what they do is they basically teach math to kids, but each kid in the class could be learning at a different level. So we're excited about ed tech. And then fintech is another explosive area, but we haven't seen a lot of deals because I think partly because of the part of the country where we are in the Midwest, but there's a lot of exciting things in fintech where people are coming up with great innovations to take on traditional banks.
Great. So you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
Yeah, I think the most important thing is to start slowly. Everything sounds good. The pitch, people put positive things in their pitch. They don't tell you all the warts on their deal. So for someone just starting out in angel investing, I say take some time, join a bunch of different groups, and look at a lot of opportunities before you invest. And then when you do start investing, diversification is key. Uh, the biggest cardinal mistake we see with angel investors starting out is they don't spend enough time looking at opportunities, and they only invest in a few. So to really minimize risk, you got to do 15 to 25 opportunities. And for the average angel investor to spend time on 15 to spend time to invest in 15 to 25 deals may take hundreds, if not thousands of hours, and no one wants to do that. So, but it's needed. So if you can't spend the time and you can't do the due diligence, I recommend that investors starting out either join a fund that's like Unbridled or other funds. There's thousands of them out there, or get into an angel group where other angel investors, and most large cities have them, where you have people who are experienced who can help you learn the ropes of the business.
That's great. And then on the other side of that, what's your advice for people running startups? What do you tell them to do before they go out to raise capital?
Yeah, so the advice we have for startups is to spend a lot of time making your first impression impressive. So I recommend pitch coaches for entrepreneurs raising money for the first time. I also recommend that they try to hire someone who's a professional at putting together a pitch deck. Venture capitalists and early stage angel investors like us are starved for time. We look at hundreds of deals a month. So the average pitch deck is only reviewed for 3 minutes. So you don't have a lot of time to capture the attention of a venture capitalist. So spend time putting together a well put together deck. And then once you do get the investor's attention and you're negotiating the deal, I tell people it's not an us versus them. We're on the same team. Once I invest in your business, I want the same thing that you want, which is to maximize shareholder value. So try to make sure that your investors have enthusiasm. And the way I put it to folks is on a scale of 1 to 10, with 10 being this is the greatest deal I've ever been in, and 1 being I would never invest. You want me to be around a 7 or 8. If someone, I may invest, if I may be a 5.1 on the scale of 10, and I may invest in your business, but if I don't have enthusiasm, I'm not going to tell other people about it. I may not help you that much with your business because it was a mediocre deal. So don't try to extract maximum value out of your investor base. Try to do a deal that's reasonable, and that'll pay off in the long run. And treat your investors as people, and don't view it as a transaction. And then after your investors put money into your company, make sure you update them frequently. So it's the number one most avoidable mistake that we see. If you do it right, if you update your investors regularly, raising additional capital is a lot easier.
Good advice. So let's talk about the state of angel investing. How do you see the industry evolving from here?
Well, I think it's changed a lot over the last decade. 10 or 20 years ago, the only way you could be an angel investor of any size was to either have gone to an elite school, like an Ivy League school, or you had a big exit. And now things are changing. Now you're seeing a lot of people jump into angel investing who are just really good at promoting themselves through social media or through podcasts. And and some of them are very successful at it, because really the key is deal flow. And we're seeing now early stage venture capital groups hire social media directors instead of analysts, just so that they can get more exposure to deals. So I think you're seeing that. You're also seeing a lot more people get into angel investing now, partly because I think the markets or the public markets are kind of frothy. But I also think, I call it the Shark Tank effect. And people watch Shark Tank and they think, oh, that's great, and you can do that and become a millionaire. So I think you're seeing the asset class is really exploding, and all the data backs it up. The amount of money going to this alternative asset class is very high.
What do you think is the biggest change we'll see in, say, the next 1 or 2 years?
Well, I think I hate to predict this, but I think we're going to see valuations come down. I think the economy is going to eventually soften up. I mean, it can't continue at this pace forever. And that could have detrimental impacts in the marketplace. Obviously in a recession, it's hard to raise money, but there's a lot of convertible notes. You didn't see convertible notes that much 15 years ago. Now you're seeing a lot of convertible notes, which is basically a way to punt on the valuation. And if you get a lot of people in at a high cap, and then you have to raise money at a much lower valuation down the road, that is a huge disincentive to the entrepreneurs to take on additional capital. For example, I saw a deal about 2 months ago where the entrepreneur had raised money at a convertible note with a $15 million cap. And I told him I thought at most his business could be valued at 5 or 6 million. And he said he agreed with that, but his concern was he had $2 or $3 million of convertible notes sitting out there that is now going to be priced at 5 to 6 million. And he was reluctant to raise money. But he realized that he needed it, and he actually did it. Now, a lot of entrepreneurs aren't going to do that. So I think it's going to be a challenge when things go south, if and when that happens. But the other thing I'll say about valuations is it's more on the entry point, the investor getting into a round where the valuations are absurd. It's less on the exit. When you're selling the business, people are still going back and paying more than they were 5 years ago, but there's still a cash flow metric that comes in the equation at some point.
Yeah. Eventually reality raises its head and you have to deal with it. And on the exit, it's kind of the time it eventually comes home.
Right.
Well, great. Well, let's talk about your investment thesis. What exactly is your criteria for looking at deals and funding them?
Yeah. So we invest everywhere in the U.S. We don't have any particular sector focus. I think we like most of the same things that other investors like. We want strong management teams, people that have done it before, preferably people who have put money into the company themselves, to show some commitment. We don't like investing in deals where we feel like the entrepreneur can leave the first sign of adversity, because all startups have adversity. So large market opportunities, that's important because this asset class is so risky. You can't just invest in lifestyle businesses and expect to get a positive return on your portfolio. You've got to swing for the fences and get some outliers. We like post-revenue companies, companies that have some market validation, they're delighting their customers. High margin businesses with high growth rates, which will give the entrepreneur room for error. And this kind of speaks a little bit about, the thoughts regarding the future and, potential recession down the road. We want to make sure that the entrepreneur is not burning so much cash that their runway is too short. So that's basically it. I think the same thing everyone's looking for.
Great. Can you talk about one or two startups that fit that thesis?
Yeah. So a couple of the companies that we've recently invested in is a company called Allotrope Medical. Is actually our first investment, and they make a product to help surgeons diagnose the uterus. So that's when a surgeon is performing a surgery. If you cut the uterus, that's a huge problem. So it's a high margin business, it's a recurring revenue business. The entrepreneur has been in the business for 5 years. So it was pre-revenue when we invested in it, but it had FDA approval, and we knew the entrepreneur wasn't going anywhere because he's a surgeon. He saw a need in the marketplace, and he hasn't given up on the business. And now it's post-revenue and it's doing very well.
Great. So let's talk about the challenges that you see startups and investors face. What's the main challenge you see your startups face in launching and growing their business today?
Yeah. So I tell people, across all startups that we see, that the three simple things that I look at are: can they build it, can they finance it, and can they sell it? And I think the entrepreneurs usually focus on building it. Usually it's you have at least one of the co-founders is a tech co-founder, and it's amazing some of the products and services that people build, the innovation and the difficulty at which they build it. But building it is it's not the hard part. And then the second thing we look at is, can they finance it? And in this market, that's very easy. The hard thing is always where people get tripped up is, can they actually sell it? And that's we love seeing management teams where you have a very solid VP of sales or a CEO with a sales background. So especially, we look at a lot of healthcare deals. There's a lot of innovation in the healthcare, but at the end of the day, to make money, you have to sell something to someone. So that's what I encourage startups to do. If you don't have a strong sales and marketing person, try to find one, put them on your team.
Great. And then what do you think is the main challenge investors face in today's market?
I think valuations, as we discussed earlier, at the end of the day, it's what price you get into the company, what price you get out. And valuations are somewhat crazy. And the other thing I've seen just the last, say, 3 to 6 months or so, is the due diligence that's being done on companies is very light compared to what it has been historically. So not only are people paying high valuations to get into deals, they're not even really spending any time on the deal itself. So I think could come back to hurt people. And it's going to, and unfortunately, the person who's going to hurt the most is the rookie angel investor who hasn't done a bunch of it, who just relies on someone else who tells them about some hot deal. In a rising market, we all look very smart.
Absolutely. So you see a lot of different applications and sectors out there. If you had to pick one or two to put at the top of the list as good opportunities for investors to pursue today, what would you call out?
I think it really depends on the individual. I would say for the most part, for individual angel investors, try to get into those areas where you have domain expertise, um, and try to get into capital light business models. Um, a company that's trying to cure cancer may be great, and it could be a great opportunity to invest in, but if it costs $2 billion to get into it and they take it public, you still may not get a very good return on your investment. And then I'd say the other thing is angels should try to avoid lifestyle companies like restaurants, for example, retail, those types of businesses, because it's hard to ever get an attractive exit or an exit at all.
Absolutely. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, we talked a lot about like the financial risk reward and angel investing, and I think one of the things that sometimes people overlook is the non-financial benefits to angel investing. The cool thing about what we do is we get to see the future. This people that are changing the world today, or in startups that are doing disruptive things, and by investing or just exploring those opportunities, you get to see what's coming. There was a company. I'm based in Kentucky. There was a company here, or that is making parachutes for flying cars. Okay. And the first time I heard of that, I thought it was nuts. And I told maybe half a dozen people, and we all laughed. And then I did research on it, and I realized, you know what? It's not nuts. And we will see flying cars probably over the next decade. So, if I weren't an angel investor, I would not know that. So it's kind of cool to be able to see the future. And if you get to know the CEOs personally, some of them can be really good assets for you down the road. You can I've become very good friends with several of the companies that I've invested in, so the CEOs. So I think that's about it. I don't know if there's anything else you'd like to cover, but
no, that's very good. So how best for listeners to get back in touch with you?
Just go to our website, unbridled.vc, and go to the Contact Us page, or look me up on LinkedIn.
Great. We'll put that in the show notes. I want to thank you for joining us today, and hope to have you back for a follow-up soon.
All right. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.